the process can come natural to some people. So we're on YouTube here as well. For some people, being a trader comes natural. For other people, it's not so natural. Some people, you're kind of fighting against your natural instinct. If you're just a natural, all these little breakouts, you're a natural investor, that being a trader, may not be your thing. And that's fine. The beautiful thing about the Marcus, I think it was Ed Seykota. If you've never read the book The Market Wizards, it's a famous book about. So I think it's like 20 or 30 of the most famous traders, or most successful traders, I guess you might say, of the time. There's several of the Market Wizard series. The guy that wrote it's a trader. He's not a very good trader, apparently. So what we're looking at here is DraftKings. I just want to go over a few stocks that I'm in. And when you become a trader, you go through a couple things. And an investor too, but it's kind of like everyone goes through the same things. Kind of like going to college or going to high school. Everybody goes through the same shit, right? Bullies, trying to be cool, like all of that. The human experience is pretty common. The cool thing about that is, as a wise human, we can recognize that and go, okay, what can I do to kind of, some things you just got to learn, right? You just got to learn the hard way. Yesterday on my story, I was talking about I had an AC unit go out, which in Texas, when it's 100 degrees, is a bad time. Your renters kind of get pissed. And I've been told over and over and over and over to clean my AC units. I just don't. I don't know why. And I had 2 of them seize up, actually. Go and clean them. They work just fine. I had the information. I knew the information. I was told the information by an expert, my AC guy. I trust him implicitly. I've used him for 9-10 years now. Matter of fact, when he launched his business, I was literally one of his first customers, because I used to do the home warranty things, because I didn't know a lot about real estate. And he was the home warranty guy, because he couldn't get any business, so he did business with the home warranty company, even though he was being paid less. Long story short, we hit it off. He's my AC guy now. So my point is, we can have the information, and we still have to learn it the hard way at times. And that's just human condition. I'm the same way. Sometimes you just got to have shit beat in your head, No, 36 is fine, bro. And so the first thing you got to do when you come into the market, in my opinion, isn't to make money, although we all want to make money, without a doubt. It's just to get an understanding of how markets move. Like, that's your first goal. Like, if you were going to play basketball, first thing you want to do is learn the damn rules of the game. Like, how does what does double dribble mean? And you're going to have to get, a penalty called on you a few times before you finally get it. Like, I could tell you how to play chess, but you're going to have to get in there and lose playing chess, right? Before you start to get the strategy, like, oh shit, okay, I get how all this goes together. But part of mastering chess or the violin or basketball or whatever it is you do, being a doc, whatever it is you do, part of the process, you learn in school, and then now you got to apply what you learned, and that's where it gets tricky. But the more you learned and the more you studied, the easier it is to apply, in my opinion. So there's definitely value in reading, studying, learning. So first things we got to understand markets. And I think if you're new to trading, even if you're old to trading, you might want to spend a bunch of time on that. How do markets move? How do growth stocks move? How do value stocks move? What is a value stock compared to a growth stock? What is a dividend stock compared to it? Like just getting the basic mechanics of all of the market. Some of that could be studying options. What are our options? What is the option expiration date? What does it mean in the money, out of the money? What is a condor? What is a split? You just start going through all of this and start with not how do I make money with this, but just what is it? Like, how does it work? How does the mechanics of the process work? Just start there. And then when you start trying to make money, you're going to have a much better foundation. Let's say you're there, you get it, you understand how markets move, you understand that an index fund, an ETF, an ETN, electronically traded note, is different than a ETF, right? Totally different. Yeah, so LCA is one that I got into, was it yesterday? I actually missed it. Ideally, this was your breakout day, and this is something that I wanted to talk to you about. If you catch a breakout or come across a chart that had a breakout, there's the breakout day technically. And the next day, it's a little lower, you can get in. If you got in on this day, you can add more on this day. We got in, I was hoping it would open, and I said, hey, as long as it wasn't over this candle I was getting in, it was close enough. So we got in right here. Not perfect. So what do I do in that situation? I take a half position. This is LCA. This is a money flow trade, a stage 2 breakout. Where's my target? These are kind of close. I think I split the difference, said like $16. Everything's going up, right? That's what I like to see. The trend is up. I assume it's going to keep going up until it stops. People, how far do you think it'll go? I don't know. But I have a brain, and I understand how the market works, and I understand that the market moves based on fear and greed. And so what it'll likely do is move up to previous levels. So in my book, I talk about price has memory. Memory is how we get support and resistance, how we get supply and, it's how we get support and resistance. So if we go back to DraftKings, we can clearly see support and resistance, right? And that's price has memory. Means it hits a spot and it stops. Memory. It remembers, hey, shit, last time I was here, I stopped. We see it right there. So price ran up, stopped. What did it do? Has memory, stopped. So where did it come to? Where it was before. Price has memory. Memory here, it'll have memory here. So when we rip higher, guess where I think it'll go? I don't know, but I'm going to sell some right there. Why? Price has memory. And so that just becomes a rule of mine because that's how support and resistance levels are formed. And so I just use that to my advantage. And I understand I don't know where prices are going. Nobody does. So people that tell you they know where stock's going are either crazy, delusional, or filled with ego. Like they don't know. Because tomorrow there could be Corona 22. There could be China invades, like all kinds of things that have nothing to do with your stock could happen, okay? So I just look for indicators. I just look for price. Whatever it does, I assume it's going to keep doing. And then I look for my levels. And so, but this strategy for me came about going through the basic 4 stages that traders go through. One, we got to understand the markets, just big picture. Like spend time every day learning about the markets, just in general. What are commodities? What are interest rates? What is the LIBOR rate? Like, how does that affect Discover Card? Once we get past that, we move into mindset. This is the hardest part. This is why stocks go up and down. Fear and greed. People freak out. Mind. So part of your mindset, I talk about this idea of the 10 pillars of success. One of the pillars, number 7, is see the big picture. That's a mindset thing. Like being able to step back from your situation and look at it. I don't know about you, but in my life, every bad thing that's ever happened often ended up being a good thing. Like not that the bad thing was good. It put me in a better position. You just can't see it at the time that it's happening. But as we get past the event, you look back and go, wow, that was really actually a good thing. I needed that to get me here, or I needed that person to leave me, or I needed that to happen. I needed to get fired. Otherwise, I'd have never went and applied for this job. So the mindset of the big picture thinking of the stock market, meaning for prices to go higher, for Tesla to go higher, we first needed it to go lower. And that's a hard concept for people to understand. Look at this support. Look at these resistance levels. And one of the most basic components of trading is when price breaks out above a resistance level, that's as bullish as it gets. And you say, how far is it going to go? I don't know. It just goes until it decides to stop. And then it'll go sideways again. And then what does it do? It breaks out. And this stair-stepping pattern of stage 1, stage 2, stage 1, stage 2, stage 1. Now, technically, I call these a 3, but the 3 becomes a 1 when it breaks out. See, the stages are interchangeable. So in the newsletter, I talk about the stages, right? Stage 1, stage 2. But there's no difference between a 3 and a 1 other than the 3 is at the top of a movement and 1 is at the bottom of a movement. But they can be interchanged. So a stock can sell off, go sideways, sell off, go sideways, sell off. It'll just stair step. Well, it can do the exact same to the upside. This is how you get runaways. This is why you can't have an opinion. I mean, you can have an opinion, but if you start trading on opinions instead of what you see, sometimes trading doesn't make sense. This is the hardest part, typically for investors. So as an investor, when you come to trading, investors are trying to make sense of shit. Like as an investor, I need to make sense of the numbers. Well, you start getting in the land of trading, it ain't about making sense. It's about price broke out, period. It's going. And this, this is why you get people trying to short Tesla, because they're investors. They're trying to short Tesla. Look where we're at, though. Big, fat, juicy 75 RSI. This level in here is probably going to be, previous resistance becomes support. Depending on how you draw these, I'm going to say right there. Could see Tesla pull back to right in here, set up to run again. There's no reason to believe that it can't just keep running. So, is that logical? No. But markets don't move on logical. So we first start our evolution as a trader is just getting understanding of the markets. And then once we have enough understanding, we can begin to execute trades. At that point, you're going to begin to push up against your mindset. Oh, I bought at 34. It falls to 32. Should I sell? Well, that should have already been planned out the moment you bought it. You should know where you're going to sell and buy the moment you buy a stock. That's part of understanding the market. But that doesn't come in. You're going to figure, everyone does this. They don't really have that plan. Well, that's called a trading plan. That's what my book is, the Money Flow Trading System. That's my basic trading plan. It's how I look at stocks and evaluate them and make decisions. It's not perfect, but it's the concepts that I think are the most important after doing this for years and years and years. Not to say there's not some dude out there with some quantitative model of whatever. Okay, I just don't do that. I keep it pretty simple. Resistance, breakout. Resistance, breakout. Resistance, breakout. Like, it's super simple. Price is above this green line. It's bullish. It's going to keep being bullish until it stops being bullish. And I don't overthink it as a trader. That's not necessarily how I'm doing investing. But as a trader, that's what I'm doing. So that starts with understanding the markets. They can go crazy high. They can go crazy low. Getting my mind around the concept of that stocks don't have to make rational decisions. They can make irrational decisions because they're done by people. And then inside of those two things, I need to create some sort of plan that I can stick to. And that's the hardest part of the evolution. Number 4 is actually sticking to the plan that you learn. So in the beginning, I said you can learn to do push-ups, but making yourself stick to a push-up plan is a little more difficult, right? So you can know all about trading, but following your trading plan is the hardest part, man. Let's check out. So yesterday I was saying the market is overbought. Doesn't mean it has to go down, but it does mean it's very unlikely to go higher. You see this? See it over here? And what did it do? Pulled back. Doesn't mean the bull run is done, but it does mean we're likely putting in stage 3 here, and you're starting to see it go sideways now. So this is the S&P 500. Unless we rip higher, which I highly doubt, which means where our support is right around in here. So if we, in theory, we could come down below the 20 and still hold support. He said, is it a moving based average? Moving averages are just part of it. 6 parts to the money flow, man. So keeping in mind, price has memory. So if I'm looking at the SPY, that was previous. Remember, that was, we drew there. We broke it. But that is pretty damn close, right? So I'm going to say our support is, these aren't perfect, but it's right around in there. Long as we hold this line, I don't get worried. I wouldn't be looking to short anything unless we broke that line. Otherwise, we're still just marching to the tune of the uptrend here. If you notice on this last one, so we do the same thing, we draw our line, right? Look what happens on the sell-off. Comes right to that line and then keeps on marching. In theory, if the bull market holds, it should come right to this line and keep on marching. So if that line breaks, I'm gonna go to the next one. If that breaks, we'll go to the, I just assume it goes to the next one. How far down? I have no idea. So when people tell you, well, I think it'll go here. Okay, well, they don't know that. They're just saying shit. They have no way of knowing. Should have taken shades away. Ulta's fine. He just didn't hit the target, bro. So patience is a virtue as a trader, right? You got to be patient. Big breakout day. Actually, it was right in here. We're still kind of back there. We got within $1 of the target. My target was 230. We got to 229 yesterday and pulled back. So let's talk about what we just said, the 4 stages of trader development. Stage 1, understanding the market. Stage 2, starting to figure out you got to get your mind around this shit, your mindset. Stage 3, you got to develop some sort of trading plan. And stage 4, you got to figure out how to follow your own trading plan. Right? That's the hard part. It's easy to write a diet. It's not so easy to follow it. It's easy to create a retirement system or plan. It's not so easy to follow it. So implementing and following the trading plan is the hardest part, which is part 2, your mindset. So what people can be tempted to do, and I did this shit for years and years, you set a target, and since it got real close and then pulled back, you say, well, shit, I'm going to make the next target a little bit sooner. And what you begin to do is change your trading plan day to day based on the circumstances, which means you don't have a trading plan. You're just trading by the seat of your pants. That can work for a while until it doesn't. So part of the process, the trading plan is having the discipline to trade it, which means sometimes you're going to lose money because that's part of the plan. A good trading plan loses money, and it's how do you lose it? Great poker players get bad cards. That's how it happens. So Ulta's one, still in a solid uptrend. There's the breakout day. We're moving up. I mean, it's looking great. We got a little momentum to a little bit of a pullback going on here, but everything's to the upside. 200-day is always resistance. That's why I use it as targets. Prices get stopped at the 200. You see it over here. And then the head's down. That is always, if you can catch those blue chips. So what do we got on the investing landscape? Could be a swing trade. I'm not a big fan of trading Intel as a swing trade unless you got a lot of patience, because this will take a long time to move. What do we see? Remember, I always say, wait till you finally stop dropping. So where's our pivot day that was the actual low where we stopped dropping? Right here. So I wouldn't even consider buying until about right in here. So what do we have forming? It's amazing. It's almost like I've done this before. Look where the base is forming. Right there on that 4th day that I talk about. You could go 3. I like 4 days from the pivot low. Meaning you got to let it establish a low. And that's what you had right there. So there is no point in buying this on the way down. And, if your horizon's for life, then yeah, but then we're not talking trading. You don't have that's not trading. That's just you buying shit on sale. You don't need a book on that or a conversation. You just do it. But if you do what I'm talking about, where I'm trying to buy the absolute bottom or as close as I can get. No, now you're rarely going to catch the absolute bottom, but I have a strategy, that's what I'm talking about, my plan, and I do my very best. So first we understand the market. Second, we begin to develop our mindset. The mindset is what gives you the ability to even follow it. We write down our plan, and then stage 4 in trader development is, can I even possibly follow my own trading plan? So it's a buy right now. Everything's turning up. The target's 57 if you're swing trading it. I don't know if I'm going to swing trade this. You could. That would be the target. Why? Look at this. Look at this zone. Hit it, hit it, hit it, hit it, hit it, hit it. I mean, come on. It's going to hit it. When does it hit it? I don't know. I have no idea. But that would be the target. Now, I would go verify do people believe the company's even worth this much money? So I like to do a little fundamental research to verify on a big cap. Now, on a growth momentum stock like Tesla or something like that, that don't matter because you can't value a unicorn, right? It's just whatever the fuck people want to pay for it. But when you get into Intel, people aren't willing to do that because you can actually value it. The growth isn't there. So the moment there isn't massive, unknown, quantifiable, massive growth, then we can gauge it. We can give a price to it. That's why you're not going to see AT&T just take off like Tesla. It's not going to happen because it's just not that valuable. There's no. So again, this one's trading below the 200. Makes me very excited. We've got this massive stage one. Look how it's just going sideways, dude. Look how sideways AT&T is going. Just sideways. These indicators don't mean anything anymore. So all we're looking at is it's just trading in a big ass box here. Up, down, up, down. So, where's it going to go? At least to 32. It's been there before. That ain't no problem, At least to 32. So I've been building a massive position in this. Eventually it'll break out, man. But that's a different game. AT&T and Intel is a different game than, say, NAKL, Nikolai, which has pulled back since buying. So here we are at the mindset. If the buy signal is here, moves up, pulls here, and you're like, hey, what should I do with this? You should get a trading plan. See, I don't have to ask that question. I know what to do with it. I do what I do with all of them. That shit's already been settled. I don't need to think about it. It's trading above the 20. Everything's moving up. I don't need to worry about it. It was already decided the moment I bought it. So if it ends up being a loser, oh well, there'd be plenty of winners. But I stick to the strategy, right? So I don't know where they're going. I just know what they look like when they break out, right? I know they're on this side of the green line when they run up. What side of the line is it on now? It's on this side of the green line. What about over here? It's on this side of the green line. So I can just, look at it that simple. Now, I add other things into the equation, but, just looking at it, what side of the green line is it on? It keeps it real simple for me. XLE, oil, right? Where's oil? Above the green line or below the green line? Is above it. Well, that was simple. We're bullish. Now, you can still be bullish even if it's below it, but it's not looking as good. So because now we got to add in support and resistance, right? So we're trading in this little zone here. We ran up. Look at the RSI, which we used, targeted it perfectly, right at the high. There's 200. That was right on the money. Pulls back, stops. Where did it stop? Almost like it's done it before, where it stopped before. So when it goes down, where's my target? Where it stopped before. Price has memory. That's how you create support and resistance. You say, well, how do you know it'll stop there? I don't. I just see it happening all the time, so I just use it. It just creates structure, like in playing blackjack. There's a time to double your hand. There's a time not to. Why? It's just based on statistics. Like if you see it happening, the only reason we have support and resistance is price has memory. Price stops at previous highs and stops at previous lows. Price often stops at the 200-day. So if we begin to see that, we can create rules around that, which adds order and structure, right? And we can just big picture it. Look, it's just going up. Big picture. So long oil right now, long Chevron, Exxon, Conoco, Fang. Look at Fang. It's above the green line. Where's the target? 55. Has it ever been to 55 before? Yeah, it was just there like a couple months ago. Easy target, right? Where's our levels? You might bring it in. So easy target, right? No need to even put much thought into the thing. You just hold in that position, you're moving on to the next one. See how fast I analyze that? Down, boom. So where's Roku? Roku's in a stage 3 right now. Is below the 20 for sure. Everything is lining up. But, all right, this is where we get a little detailed here on the, let's take it a step higher. Here's our support, right? What's the histogram doing? It's ticking up. That means the momentum to the downside is slowing and it's holding support. This is a stage 3. Stage 1, stage 2 breakout, stage 3. Right out of the thing. 1, 2, 3. If you don't see that, you need to go back to the book. Very nuanced, right? So on my podcast, I call it Mastering the Trade. Stage 1, stage 2, stage 3. Stage 3 is almost always preceded with an extreme RSI that becomes the anchor point. Woohoo! Look at that, man. What's crazy, I wrote the book years ago, and you just see it happening in front of you. I didn't make this shit up. I'm just watching it. So if you drove by the gas station every day and the gas was $1, 10 cents higher, 10 cents higher, next day 10 cents higher, and someone said to you, what do you think gas prices are going to do? You go, well, the last 7 days they've been up. Shit, I think they're going up. Why would you look for a reason for them to go down? Now, here's what the really smart guy does. Well, you know, in China, they're having a... And he starts telling you all about some politics and some other bullshit. And you're like, I don't know, man. Every day I drive by, it's higher. Like, you just keep it that simple. You didn't even go read about OPEC or the Russians' relations with Saudi Arabia. Like, you didn't read any of that shit. You just looked at the price of the oil every day and you went, looks like it's going up to me. Like, that's what charts do for you. Now, you can go read, and you should, so that you can begin to position yourself, right? Like, you want to do that. But at the same time, so you could go read shit right now, I promise you, on Roku that says you're an idiot if you buy this right now. But if we look at the chart, it seems to be holding support. This is correcting in time. Look, history. Now that could turn tomorrow. So if it breaks out, what is that? That's a run up. We're going to another stage 2 breakout. If we break down, where are we going? Price has memory. Probably go to about right there and stop. That's how I would look at it, you know. And so what I want to try to do is find stocks that I think are worth more than the price they're paying at. I mean, it's simple as that. And then apply all of this, what I just talked about, to them. What stage is silver in? So let's look. Come on, man. Come on, man. What stage is silver in? Stage 1, clearly, right? Stage 2 breakout, clearly. There's your pivot. So if I was looking at this, 1, 2, 3. There's your box, stage 3. Look at the momentum, went the other way. There's your pivot point on the extreme RSI. Bro, you need to PayPal me $10,000. I just saved you a life of heartache. So there's your pivot point. That's where you're going to draw resistance. So unless you break above this, you're in a stage 3. Doesn't mean it has to go down. But this has got to get worked off, which is what you're seeing happen. So it'll probably come down. Look, right over here. Here's an example. Got to the extreme. Basically went sideways. What did it do? It worked this off in time. It didn't go down. So you had stage 1, stage 2, stage 3. It never went down. It worked. The RSI has got to come back to at least 50. Institutional traders are not buying this shit on a 70 RSI. That's the dumb shits like me and you who are using our app at work. Like, institutional traders are not doing that. That's me and you doing that. They wait. They want it down here. They need room. They're trying to get a lot of money in. They're not buying with one click. They're buying billions, right? So they need this number down. And when it does, then they start piling in. and then it rips, and then it's on TV going, you should buy gold and oil, and it's always up here when that happens. And then when we start jumping in, that's like, I mean, that's the pattern, man. Big funds aren't buying like we do. They don't buy one time and watch it. They're putting in shit tons of money. It takes a while. That's what these stages are about. If you look at the name of the stages, it says distribution. They're slowly unloading their shares, and then they're going to come out in public and say, hey, we don't like this stock anymore. And then it craters and everybody sells it down. Or accumulation. They're quietly accumulating, and then it breaks out. So now that doesn't mean as traders, as nimble traders, you can't get in on this stage 3 action. I'm not saying that. I'm talking big picture now. And we may march sideways here for a minute, and you could establish a position. And let's say you want to get in silver right now. I mean, you got to put a line in the sand right here, because if this breaks, dude, it's coming back to like here. Like, that's a hell of a drop. I don't think that's going to happen, but you have to be aware of such things. Let's talk about Discover. I like Discover, man. I'm building that baby. Let's see. Woo! Danger Zone. What's that song? Danger Zone? I need to get that song. All right. I really like Discover. I think it's worth a hell of a lot more money. It's trading below the 200. That's beautiful. We had the breakout. I got long. And now we've pulled back basically to the same price. This is me talking. My trading strategy is, this is bullish. It broke out. I continue to think that way until it doesn't. So I don't think negative right now, because that would be like being on vacation and thinking about work. And then I'm at work and I'm thinking about vacation. That breakout is, I'm bullish until it no longer is that, even if it pulls back to the 20. So back to what I was saying, the mindset component. So I've settled that. This is bullish. I'd be a buyer. You get a chance to get back in before it rips higher. Now, let me give you an example. Breaks out, pulls back, runs higher. Like, that's super common. Breaks out, pulls back. It's still way undervalued. So what's your edge? Your edge is, what's the value of the company? Now, if something happens and they say, shit, this thing's only worth $36, look out below. But we know it's worth more. We've got clear support. I mean, depends on how loose you want to draw this. I would say like right around in there. It's not perfect. Right around in there. Even if it dips below the 20, as long as this zone is holding, I'm fine, dude. I like it. I like Discover. Where's my buddy Uber? So look at Uber. Look at this box Uber's in. So the indicators don't really help you much here. See our support zone. There's our resistance. Price has memory. Hits it, down. Hits it, down. Hits it, down. Where's the histogram? There's not a lot of momentum, dude. Not a lot of momentum. So the moving averages aren't helping you here. If you're a trader, if you're trading this, purely trading this, and this zone breaks, you should get out, or at least sell some, because the next zone is like $27 and then $22. I find that hard to believe we go that far. I think you can use intelligence and be a trader at the same time. My target is $42. I'm more than willing to hold this. What's up, Aaron? There's a lot of government right now. Government's doing weird shit. Like, they want to keep us safe and destroy our businesses at the same time. It's pretty weird. I would hold Uber. I'm not selling it. If you're a trader, though, this is your line in the sand. Maybe this, right around in this zone here. It's real. It's right there, though, man. You could put puts on it. That's one way. You could go buy. Now, don't buy your whole damn position, but you could buy some puts so that if this breaks, your puts would protect your downside. That's an option. Where's lift? Lift is in that same boat. We've got this level here. So I'm not selling them. So I've told that over and over to the people in the Money Flow Trading Society. If they break, I'm not selling. You don't even need to ask. Like, I'm not selling them. I think they're going much higher. If they break, I'm not buying the first day. So let's say Uber drops 10%. Don't buy it. You got to wait. What are we waiting on? I'm waiting on this stage 1 to set up. It needs to go sideways. Okay? Never buy the first day of a big drop. I just don't think that's going to happen. Damn. Since I've been watching this stock, it's weird. It'll rip. The volume, I guess, is, I don't know if it's just not many people trading it. This thing was up 6% and then it's pulled back. Tesla bubble. Who knows, man? Tesla does what Tesla does. Yeah, I wouldn't sell them. If they break, I wouldn't be ready to buy them. I'd wait a minute. It's one of those deals. Cisco, buy and hold. I wouldn't swing trade Cisco. I mean, you could. It's just not exciting. So here's a classic example. Remember I say wait till you get a pivot day. You got a pivot day. Now we can draw support. See that? It stopped dropping. Now we can draw support. That's not support over here, though. Maybe you're connecting that. Like, see how that slopes a little, though? So, volume's low. But here's the kicker. See this? This needs to do that. It needs to go the opposite way of price. Why? Look. See the bottom? Look what the histogram did. It went that way. Look. It's not that way. It's not there yet. Don't buy Cisco yet. I'm telling you, don't buy it. I mean, if you got a bazillion-year lifetime, you could. If you got unlimited money, buy away. But I don't. It's not my trading plan yet. So example, look at Intel. Intel got smashed. I said, wait until what? Wait till we get a pivot point day. So, okay, we got one right here, right? We just got one on Cisco. Now here's one we got on Intel. When was the good time to wait to buy? Look at the histogram. It needs to tick the opposite direction. The momentum is slowing. So when it's going down, right? Momentum's to the downside. When price stops dropping and the histogram goes the other way, that's your first sign this is possibly a bottom. We don't know for sure, but every bottom looks like that. Every single bottom ever in history looked like this. So what does that tell you? I'm not a genius, but if it shows up again, there we go. They all look exactly the same. All of them. Extreme RSI, big gap down, they put in a pivot point, and the MACD turns. PayPal me $10,000. I just saved you a lot of aggravation. What I just showed you, you don't understand how long it took me to catch what I just showed you. Like how simple what I just showed you is. And if you apply this on every stock that gets smashed, whether it be Facebook, they get smashed. You don't buy day one. You wait, and you wait, and you wait, and you wait until it puts in a pivot point that you can draw a line on, and then price goes above it. And then I like to, if I look over here and there's support, like a solid line, I only need 1 or 2 days. If I look over here and there's no support, I need 3 or 4 days, and I need this going the other way. And the moment you get that, jump on it. Doesn't mean it's the absolute bottom, but that's where you take your first position, and then you let it develop. And what's going to happen? That's going to be stage 1. Stage 4 decline, stops, starts going sideways, you start buying. Man. So, FE. I've been buying this in my buy and hold portfolio. They got a lot of problems. Company's worth $42. They're being investigated for paying off politicians. It's an energy company. They're not going out of business. Big down day. I actually had people should I buy this? Hell no. Why? Broke support. This is day 1 of a stage 4 decline. Day 1. This thing could go. So I assume it's going to keep on going until when? Till it doesn't. And that was this day right here. Now, you had no way of knowing that big day. Money came in, boom. Now we got to stop, right? What am I waiting for? It's flat. What do I need it to do? I need it to turn. The moment this turned, that told me this is a bottom. And now I can draw a line. And now I can safely start buying. Where's the target? $41. It's the exact pattern over and over and over and over and over and over. The hard part you're going to have is step 4, actually following it. That's the hard part. Knowing it is easy. It's implementing it that's hard. Consistently, day after day. It is so simple and yet so hard. It's like doing push-ups. It's like so simple, it's so hard. What's another one? Oh, AUY. I kind of jumped on this one. All right, what do we do here? This is tracking gold. We had a breakout in gold, right? Gold broke back out again. Same as the silver question. That tells, this is a stage 3, okay? Why? Because I got to pivot here. And until we get above here, as far as I'm concerned, in my mind, stage 1, stage 2, stage 3, okay? That doesn't mean it's going down. And this action here is crazy bullish. So if I want to get on this, if gold's going much higher, right, and it got back above. Look, it was in danger. Look how in danger it was. This was dangerous right there. Shit, everything is going the wrong way. And then, you know, I would have called a sell signal on gold. And I think I did for like a day. I had a guy jump me on it. I'm like, bro, the information changed. I'm not a dumbass. I can have a sell, and then the next day that changes because the information changed. The price went above, and now we're back into the box. So we can go from bearish to bullish in one day if the information changes. And so you got to, that's being a trader. Being a trader isn't having an opinion and then holding to it at all cost. Now you can, but if you're trading, you got to be able to change your mind when you see what you see. You know, remember people were like, it's a dead cat bounce in the market. Okay, but it's going up. That's been a long dead cat. So gold is bullish again. So my play on gold was the AYU stock trade. What am I looking at here? A very low risk entry. We got a stop zone here. Same thing, it's in a stage 3. And we got in right here. So I'd be comfortable adding to this. Look, histogram's turned. You're taking a shot. It's a low risk. You know, if we break through this 575, I'll probably close out the position. I'll probably close it out. I don't know. Maybe I don't close it out. Maybe if you got a long-term because look, we got a pretty solid. Look at this solid. Look at this zone, dude. Look at this. You know how they talk about resistance once broken becomes support? Look at, dude, look at this. This is resistance, right? Price can't get above it. And then it does. Now when it comes down, where does it stop? Right at it. Chapter 4 of the money flow. Now, I didn't invent this shit. I just talk about it in the book. I mean, my God. This is AYU. But you see how that works on every stock. Like, it's crazy. So look where it stops, and then look at the histogram. Again, this isn't perfect, but this does tell you when it's done. So it sells off, stops. I would have noticed the support and resistance, which is when I started looking at it, right? And then look, the histogram turns. It turns. What does that tell you? It's bullish. Soon as you close over this green line, you add more to your position. I wouldn't sell here. That's too close, and we just let it run. If gold wants to run. Now, if gold breaks down, this goes down. I don't think Warren Buffett was buying gold. I think that's the guys taking over or buying gold. He said, if you ask what stock, that's actually bullish when it holds exactly, man. So you see how we bring all this together for the money flow? Like each one of these have an importance, you know, support and resistance, Where's the RSI? Where's price in relation to this green line? I want it above it to go up. And if it's below it, it tends to go down. But we got to take into consideration where's support and resistance. Are we in a box? What stage are we in? Where's the histogram? See how we start putting all this together? Woohoo! So, yeah, man. Yeah, man. Good stuff, huh? God, bless. So it's so ingrained in my head. Like people will, like I talked about the 4 stages of trader development. First, you just got to understand the market. 2, you got to start working on your mindset to avoid FOMO and all that kind of shit. Okay. 3, you got to develop a trading plan. What is your strategy to enter, exit, take profits? And when are you going to kind of, because sometimes you'll see I hold a trade into a stage 4 decline. Why would I do that? So I have a plan for why I do that. And number 4, you got to learn how to follow this plan that you put together. Okay. So that's the 4 stages of trader development. And it's going to take you time. I don't care how smart you are. You're going to do dumb shit. But once you've been doing it for a while, number 4 is the key. Just making yourself stick to your plan. Like, even if you're losing money, like you just go, and you just lose money because that's the damn plan. It hasn't been hit. The stop hasn't been hit. Can't tell you how many times I would get out early only to wake up the next day, stock's up 8%, goes to run 38%, and I got out because I got scared for whatever reason. I mean, I've done that so many times that now I hope I lose. Like, let's just lose. And once you got past losing and not giving a shit, like, it just got a lot easier for me. And so I just settled into this process. Like, these are the 6 things I look at. And then on top of all of that is value. What is the value of the company? And now anything anyone else shows me, I just don't care. Like, they'll be like, Jero, what about the volume? Don't care. Well, what about the 50-day? I don't care. What about don't care at all? Didn't even look. Don't know. Like, I've completely just settled into this is my strategy 100%. And I've mastered each component of each indicator, what they're telling me. And I know exactly what it looks like when it breaks out or goes into a stage 1, stage 2, stage 3, stage 4. And once you do that, it gets easy, man. Now, it gets frustrating because we don't have control of the markets. That part will piss you off. 3 minutes. Thank you, Mel. What would I do without my, I would have no sense of time. Let's see. If you're looking to hedge the market, TMF is setting up. This is a hedge. If the market does turn down, this will go up. And you see it's coming right into support. I'm in a position here. We got in on the breakout, sold some at 46, still holding it. Yeah, I held it into a stage 4 decline. The histogram's turning. The reason I did this is the market is a little overpriced, I believe. So I will be building this up. This will go up if the market goes down. If the market doesn't go down, you're just holding bonds. It's not a big deal. You could buy puts. You could lose all your money doing that. You could go reverse index funds. That's the most aggressive way. That's a harder way of trading. Most people lose money. Bonds, this will never go to zero. This is a triple leverage fund of the TLT, which is the government 20-year bond. So the easiest way to hedge your account would be this here. This pays an actual dividend, but that is $164 a share. An inexpensive way is with the TMF. It's $40 a share and moves 3 times the other one. So, it's slow and boring. This is not trading. This is just protecting. Like, here's what it did in COVID. You saw it run up. So it's a very simple way. Bonds and cash are the easiest way to protect yourself if you think you need protection. It's the easiest way. And hard stops on half your position. So back to Uber, if you're not comfortable writing it down, put a stop on half your position right here. There's nothing wrong with that. That way you're half right, half wrong. Let's say it doesn't, it breaks and it comes right back and runs up. At least you're in it, right? So protecting yourself on half your position is a great strategy. And I do that. You'll see if you follow with me, sometimes I'll do that. I'll sell half if support's broken because I pick such quality stocks, I believe, that over time I end up being right. But as a trader, you don't want to tie up all your liquidity going down. I get that. So, the less money you're trading, the more you got to respect not writing stocks down. Like if you only got 5 stocks, you don't want to write it down, right? If you're trading, you're investing, that's a different conversation. So keep that in mind. Like big picture, not every, the way you trade the money flow could be a little different than the way I trade the money flow. Like we can all have the same strategy and implement it just slightly different. Woo, this is a giant stage 1, bro. This AMRN. I like it. $12 target. Go see if the company's worth it. If the company's worth it, I love this. Why? That's a giant accumulation. No selling, just buying, 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 buying. Those tend to rip. If you're a student of Stan Weinstein, which is where I got the basic concept of the money flow, he loves these long sideways. Gives you plenty of time to buy. Nerve is one that I'm in. Look at this shit. Look at this long sideways. What's my target? $6.50 and $15. Now, will it ever do that? I don't know. But this is a pretty solid thing. And so this is a spec play for me. We'll just see what happens. My man said, dumb question. Not a dumb question at all. If you were going to look at buying a used truck, where would you go look for the value of the truck? You'd go to Kelley Blue Book. Same thing in stocks. There are plenty of places. I use Morningstar. You know, Morningstar's one. I have a paid subscription. It's $200 a year. You can get the information for free. Like my man said, if you Google around it. A lot of times your brokerage account will do it. Inside of E-Trade, you click on the stock. It'll show you what the analysts are recommending. Kind of dig around in there. Some analysts will be crazy. I like TipRanks because it ranks the analysts. So if an analyst is a shitty analyst, it'll give him a 1 star. You might not take his opinion as well as a 5-star analyst from, say, JP Morgan, who's got a 5-star rating, who's like right 70% of the time, and he gives it a value. That would carry more weight to me than a guy that has a 0.5 star rating. So I like TipRanks for that. And so I bounce them off. And then I go read myself. Like I try to read what are the earnings. I don't get crazy down the rabbit hole of trying to, you know, be a gram and you know, that's just a big waste of time. I do investigate, like I trade Roku. Looks like it is IG just letting me roll. I trade Roku. I actually ordered a Roku device just to see how it worked. You don't have to be like that silly. Like if I buy shares in a stock, I like to go look at the store. Look at Roku setting up. Histogram's turned, sitting right at support. I'm long Roku. I'm ready to add to this one. Yeah, it's not hard to find values of stocks. And sometimes I hear people say, you know, criticize analysts. Look, dude, it's not like you would know any better. You didn't go to college to study finance. Or maybe you did, but nobody knows the real. We just need to know what you're looking for is if I was writing a check to buy the whole damn company, what's the value of it? I just need to know that's higher. If that's higher, now you have the edge. That's an actual edge, meaning you're trying to. So if you're going to flip a house, you need to know what the houses sell for in that neighborhood. I mean, since I do real estate, I apply the same logistics from real estate to stocks. You know, does it make sense? Is this a buy and hold house or is this a flip house? Roku for me is not a buy and hold. This is a trading stock because it lines up perfect with the money flow. Sideways up, sideways down, breakout, runs up, sideways. Like this is a trading stock. I hold 44 stocks in my buy and hold. About 7 of those I trade around in my trading account as well. I like trading McDonald's. That's a good trading stock. See how well it moves? I like trading Starbucks. I also own it in my buy and hold account, okay? I like trading around Delta. I also own it in my buy and hold account, which I'm getting ready to add to. Look at this pullback. Why would I add to this? Because it's a breakout. Look, there's the breakout. We pulled right back. It's still a breakout. You're getting a second chance. If you look at this and see it as negative, then you gave up on your breakout, which makes you a quitter in my book. Don't quit on your signals. So when this breaks, I trust it until it doesn't. Make sense? I trust it till it doesn't. Now, if it breaks down, it breaks down. But I like to stay with it because I've made so much money doing that. It popped for some reason. This little sell-off, you know, yeah, we're pulling back. As long as we stay above the zero line, I'm good. Learn to read this histogram. It can really help you. American Airlines is a buy. Look at that. Pulls up, pulls back. To me, it's a buy. Now, we break down, obviously, not a buy, but I would buy here. Target $18. Sounded like the Don. Why didn't you come to me to borrow money? I like Delta. I'm in it. I like Air. I'm probably going to be adding to these today. Air's more volatile. I like SPR. It's below the 20 though. Yeah, I like the airlines. They're pulling back. I can't deny they're pulling back. DPST is pulled back right to the 20. So let's check the AIT. It's sitting right at the 20. I would be adding. Look, the trend is up, dude. Assume the trend will continue. Don't be the guy taking the opposite of what you see. The moment you do that, you're on vacation thinking about work, or at work thinking about vacation. You're not in the moment. Don't let that little thing change your opinion. It's still moving up. It's still above the 20. Everything is still going up. Like there's no reason to get bearish on this yet. If you're bearish now, you got bearish too soon. Wait before it breaks this level. Now, if it breaks this level, it's time to be bearish. So sometimes people hear me say that and then they're like, well, the next day you said you were, yeah, it changed. Like you got to be able, so until it changes, I stay with it. And the moment it changes, I change, you know. I see people criticize Kramer for that. Well, last year you said, he goes, yeah, it changed. That's weird. Instagram gave me more time. Odd. So, and when you're right on these lines, it can change. When you're sitting right on support, it can change overnight, man. Next day, it could be a whole different ball game. Dude, grab my free book, man. You don't have to die broke. Grab the book it. Book it. I was looking at buckets and said book it. What is wrong with me? Oh, let's see where DraftKings is on the way out. I'm obsessed with this stock. 42. I'm obsessed with this stock. EVRI. Ooh, EVRI. That's one of Mel's picks. That's one of Mel's picks. We've done good on that one. UTSL stage 3. On the UTSL, go to the XLU. And not a stage, yeah, it's a stage 3. You're right. See that support line though? Let's don't get worried unless it breaks that. But remember, my target was the 200, so we ran up. So if it pulls back, you might get out of the triple or downsize it, and hope we get lucky. It'll come back down here and we can do this game again. Look how many times we've been able to play this game. So I love this. I love the XL, the UTSLs, the triple leveraged, you know, electrical stocks. All right, guys, be good. Somebody asked about BXR. Sorry, I was typing over here. I'm in BXRX. I added over here, calling this support. You can see right there. Been a serial disappointer, but everything's turning up. I added you know, hopefully we get it right this time. Here soon, I got to stop adding. I got too big a position. Let's see. ARKF. I'll go through some of these from you guys on YouTube. ARKF. Woo, bro. Yeah, that's what's her name's fund. Stage 3, like the market. That's an amazing fund, dude. I own that. I wouldn't be selling it. I would just hold that damn thing. Uber's not quite a stage. I wouldn't call it a stage 4. I could see why you might say that because it's below. It's, you know, at this point, we've gone into just a giant consolidation. You know what I'm saying? Look at this. So, you know, I mean, we've just kind of broken out of the stages, to be honest. And unless we get down where they're really tiny, you know, stage 1, stage 2. It's like at this point, we're just sideways. If we break here, yeah, stage 4. If we break up here, stage 2. So, I don't, you know, it's one of those ones like, who knows? We'll see. I really like the company. I'm going to hold it into a sell-off. I'm going to look to buy more. Man, I don't know about Tesla. Tesla's a unicorn stock, man. I don't know what to say about Tesla. It's just one of those ones you just own like Apple, and it just goes up. I don't know what to, you know, I would just own it. Any conventional advice says it's way overpriced, but that doesn't seem to apply to Tesla. You're going to get unicorn stocks. It used to be Netflix. It was Amazon. Ooh, Netflix is breaking out. How the hell did I miss that? All right, look at what we have underway here. So let's watch Netflix. Netflix can. I've made a lot of money trading Netflix. Biggest loss ever though has come from Netflix. Look, tried to do it here. Couldn't hold it. Now, I trade with much wider stops than other people. I'll go back to the stage 1, and that's where my zone is. So I probably would have got stopped out here. But it came right back into the box, super bullish, and now we're moving up. I'm probably going to buy this today while we're speaking, to be honest. I like Netflix as a trading stock. It's way overpriced as a company. What did my man say here? I hate how YouTube doesn't let the comments stay up, or I don't know how to do it. FVRR. Like on Instagram, you can just see them. Yeah, this is stage 3, bro. You see how I say that is, okay, I'm looking for a pivot point. You know, pivot points are where you can draw support and resistance, okay? Doesn't mean it's done going up, but it gives me a place that I can draw a line, right? So we have one there, and then we have a bottom. Probably right. I mean, it's pretty tight, right? But I mean, this is a stage 2. It's going up. But once I get this extreme and I get a pivot, I kind of just make the assumption I'm going into a stage 3. Just like out of here, right? I'm making the assumption that right there is that RSI high you see, and now you're going sideways. That's the assumption that I'm making here. If you break out above it, I would, definitely wouldn't sell. If you got in way down here, I'm imagining you've already scaled back. Wow, this has been a beautiful stock though, man. I would stay with it for sure. All right, guys, be good.